All right, hi everyone. Welcome back to our weekly trading forecast for the week of 21st September to 25th September. So my name is Dylan, and over here is JJ with me. So welcome back, and let's kick off with the dollar index as usual. So let me just share my screen right now. All right, so this is the dollar index. Let's look at the daily charts. So one glance at the on the daily chart itself on the dollar index, we are seeing that dollar has been supported since it reached a low at somewhere 92.5, 92.6, and that's where we see the dollar has been ranging downwards. As it ranged downwards, we saw that it forms a falling channel, and that channel has been broken above somewhere in early to mid-September itself. And also, this trend line that you can see right here, connecting the highs over these areas, has been broken at the same time. So that's where I actually decided to turn my view on dollar to be more bullish buyers in the in the short term time frame, shorter time frame. So last week is more the last week itself. You can see dollar is still ranging, but it's more of a pullback towards more of a pullback for the previous bullish trend right here. Okay, so if we go to the 4-hourly charts, all right, we are seeing that ever since it formed this lowest price right here, price has came back up already, okay, back to somewhere to the top of the range again, and it came down and it continues to find support at 92.8. All right, and just before the market close, it got supported. And just want to talk about last week FOMC. I would say it's not really dovish, neither is it hawkish. It's kind of neutral. Market is trying to bet whether the Federal Reserve will actually adopt negative interest rate, which at this point of time, based on the previous FOMC, definitely is not in the picture right now. But however, definitely they're still going to hold rates low, unchanged throughout 2023. Projections for growth for like GDP and stuff has become actually better, which means to say the Federal Reserve is actually expecting the economy to recover faster as compared to when the virus first broke out. And of course, their main goal is still to revive inflation and looking at the employment, the labor markets. They want to revive the market, the labor market back to full employment, but which is going to take years, of course. So that's pretty much about it. So if say the market is trying to bet for a negative rate and with what happened last week, it's kind of hawkish in a way, but it's still dovish because they're going to hold rates unchanged throughout 2023. So that's why I mean by it's really a very neutral stance, which is why we saw the dollar index, okay, right after the FOMC, the day after FOMC, it climbed all the way to the top of the range and then it pulls back again. But this week, I'm still looking to buy the dollar simply because back to the weekly charts, it has been very oversold and trading at the low. We haven't seen any very strong pullbacks just yet. And with this kind of neutral stance, I think if there's nothing that's strong enough to push the dollar even lower, then the market could respect the technical oversold in this situation and the dollar may continue to pull back even further. So right now, as you can see, if we go all the way to the 1-hourly charts, it is trading within this range, price supported at the bottom of the range, rebounded off just prior to market closing. So this week itself, I will be looking to buy. As soon as the market opens, if there's a good opportunity to buy, I'll just buy somewhere at this level right now. And of course, first target is back to the top of the range right here. But going forward, I think it can break even higher. Okay, at least we'll see it come back into the into this supply zone at the top right here. Okay, so we can see all the way to 94, and even a little bit higher will be, somewhere. I think 94 will be probably the best price to take profit if we were to buy the dollars for this week itself. All right, hopefully it can actually form another wave of a bullish trend, completing two bullish waves. At least that will show some significant pullbacks before the dollar continues to trade lower, possibly in the future. So, yep, that's for dollar index. Next, let's take a look at the euro dollar. So very similarly to the dollar index as well, we can see the euro dollar is also trading within this within a range right here, okay, somewhere between 1.18 or 1.19, I would say, yeah, 1.19 to 1.1750. So right now it's definitely trading somewhere near the top of the range as well. Again, all the way to the bigger time frame, euro dollar is very overbought as well. Haven't seen any very significant pullback. And of course, we also want to take note that there's already, sort of three, the similar the similar bullish wave which has been completed right here. So after that, we just go into consolidation. Haven't seen any strong pullback yet. So expecting to pull back a little bit further before it continues to rise. So therefore, this week again, definitely still looking to sell the euro dollar as long as it doesn't break above 1.1946 right here, this high. Okay, this is a very important one to watch out for. Or you can actually even take this as the entire supply zone for the week. So as long as price doesn't break out of this supply zone, we will continue to sell the euro against the US dollar. The only thing I cannot be very sure is whether the price will go up first before it falls further, or will it just start to fall from this point right now. Because definitely right now what we are seeing is that the highs are getting lower as well. So I mean, and the low in terms of the low itself, not the closing price, is also getting lower. So I think that technically speaking does gives us more confidence to sell the euro dollar immediately in the beginning of the week. Target wise, of course, back to the support level of this range, 1.1750, and then all the way to this important support level, 1.17. In fact, the most bottom area of the entire range right here. So that's pretty much for the euro dollar. All right. So next, I would like to pass my time over to JJ to share his trading plan for the week.
Okay, first we have dollar CAD. This week, dollar CAD has just been ranging sideways, no direction. So looking at the smaller time frame, we can see that it has been trading within this range. And similarly to the dollar index, for me personally, I'm expecting let's consider this to be the first wave. I'm expecting another one somewhere back to this supply zone here. So we can see that after one wave of this breakout trend, the dollar CAD has been going sideways. So this week, actually, if price were to come back to the bottom, I think that would be a good price to enter again for take profit of around this level. And if it does manage to break through this level, then the next strong resistance can be seen at the neckline of the previous head and shoulder pattern, which is very similar to the analysis last week. Next would be pound dollar. As predicted last week, pound dollar got supported here, and this week it came back up to retest this support and resistance zone. And as you can see on Thursday, it formed this doji candle before forming a bearish candle on Friday. So with that, I believe we can actually continue selling pound dollar back to this first support level. And if it does manage to break then the next support, there will be more room for downside, which would be at this level of around 1.25. So this will be my two analysis.
All right, thanks, JJ. For the pound dollar, just want to add on. Actually, in fact, if you could just plot a trend line from the lowest price in this entire charts, yeah, and just connect the previous, yeah, something like this. You can already see that this trend line has broken below, so multiple breaks of trend lines, and you can see that the pullback this week, it takes 1, 2, 3, 4 candlestick, about 3 candlestick to actually pull back and recover the losses from the previous bearish candle, and then it got resisted and came down very quickly before the market closed. That's actually a very strong sign that the bulls or the buyers has been exhausted, and a very good time to continue selling the pound against the dollar right now. Yep. So going forward, I'll just quickly come back to my screen. So going forward this week itself, we have a lot of PMI. So far, what we have been saying right now is we are looking at more recovery for the dollar, more bearish on the eurozone and the British pound as well. So this week we have a lot of PMI data on Wednesday, right? Yeah, Wednesday, which is the 23rd September. So we have the market manufacturing PMI, Germany, the Euro as well, and the British and the UK. So if these data turns out to be underperformed, worse than the forecast or consensus, then that's going to be very helpful for our trading ideas this week. So watch out for Wednesday. It's a very, I think these data will be quite key to the short-term movement we are looking at this week. All right, next, I want to talk about gold. So gold has been ranging for a really extensive period of time. It's going to be close to 2 months. So I think by now it's about 1.5 months already that the gold has been ranging ever since the sell-off, starting from 7 August throughout 12 August, the entire week itself. And then right after that, it forms a symmetrical triangle. Based on Elliott wave theory, the Elliott triangle, this is the beginning of the formation as it forms the point A, B, C, D, and finally completed the E. So based on the previous trend, it's a very obvious bearish trend. And right after this entire consolidation ends, usually it means it will continue to fall from here, right? So, and if that is what's going to happen, at the very least, we can see that after it has formed the point E of this Elliott triangle, price came down, pulls back again, and retested the previous high at 1,971. And then it came down again and broke below a previous low right here, creating a lower low. And of course, at the same time, it also broke below this entire this rising trend line, where we see point D all the way to point E. So there are multiple breaks, after which it pulls back, right? As you can see, this entire bearish candle took many candles to actually recover. All right, so this week we can definitely continue to do to sell the gold. I think there has been significant pullbacks already, and when it actually gets to this supply zone, very obvious supply zone, very strong resistance, and it started to reverse. So in the beginning of the week, I think it is I think as traders you can start to build your position to sell the gold from the current price. If it pulls back further, try to sell a little bit more slowly at the position. Stop loss to be really safe above 1,970. I mean that is to be really safe, but you want to go a little bit aggressive. Somewhere at 1,970, just right around the area will be quite enough. And of course, this will also sort of agrees together with selling. I mean, buy the dollar. You know, so looking at sell gold, buy the dollar. This will also be a pretty good trade for us to take. And of course, also want to remind you guys that in the day chart, there's this rising channel that been for a really long time. And just remember that this rising channel has been broken below already after it has formed point D of the arrow triangle, pulls back to E, actually got resisted at the bottom of the channel as well. So there are really very strong resistance right here. Very good chart patterns, I would say, for us to start to go in the coming week. Target wise, back to the 9-year low. I mean the previous 9-year high, 1,912, and could it actually go even lower? Possible. That's still not very sure, but this week we'll just look to somewhere right here. But there also could be a possibility there might be even stronger sell-off. So I mean, as it reach the 1,912, okay, take some position and see if the gold will continue to break even lower from there. All right, so that is for the gold. And last but not least, just want to touch on the US 30. So the US 30 Dow Jones, the US stock market has been ranging after it sold off. I mean, due to the tech sell-off, which I didn't really read too much about it. But end of the day, I think the stock market is definitely very overbought and not on a very, how to say, I mean, as in economy is not really recovering that well, but shares are just rising. So this is a abnormal kind of condition. Sell-off like this will happen. I mean, it's very normal. So right now, if we are just looking at the technical point of it, we are seeing that the prices came back all the way down, back to the bottom of this entire rising channel. So it actually rebounded off, but got resisted very soon in this supply zone, came down again, retested, almost broke below this entire rising channel. So I mean, looking at the current situation right now, it does seems to me it's just some trading within a symmetrical triangle right here. So since it got supported at the bottom, we can wait and see when the price pulls back to the top of this symmetrical triangle, whether there's a resistance at this level, then try to sell again. I think definitely there are more rooms for us to sell the stock markets, but just want to be really careful about it, because right now the theme is the market is always trying to buy back whenever the price dip to a very low level, and I think right now it's pretty significant. So trying to sell the Dow Jones right now could also be quite risky in a way. And of course, if you do believe that the stock market will continue to rise during this period of time, you can actually just look to buy this week when the market opens, because right now it's already trading at the low of this entire range. Otherwise, can try to sell at the top and expecting even stronger or further pullbacks. I wouldn't say stronger, but further pullback. Okay, forming something like a head and shoulder right here. So that could be a technical sell off if you want. And somewhere back to this level, 27,000 will be a very good price really. As you can see, this is a very strong previous resistance and support as well. So that's pretty much for the Dow Jones for this week, and we'll continue to observe. All right, so with that, anything else on your side, JJ? Anything else you need to share? No? All right, if that's the case, we have come to the end of this weekly trading forecast. So thank you so much for watching, and we will see you again next week.